Hello everyone, my name is Ninas and I'm going to explain about what happened on EURUSD last week and show you how easy it is to play that. Okay, we'll come from this week, 19 May 2025. We go to the higher time frame first. This is the higher time frame. We were moving from this daily demand zone. You get into that. Okay, this is our daily demand zone. Market has touched here. The market turned bullish. So when I come to this week, my bias is already bullish. And then I was on this. Let me explain my strategy first. There are three important things for my strategy. First thing is liquidity. The second thing is fair value gap. And the third thing is higher time frame direction, higher time frame trend. These are the three things I'm looking for and I come to trade. Let's get to that. Market opened on Monday. We gapped up. The ratios is in range a little bit. And then during London, it's exploded too much. We took yesterday's high and last week's high. See, I not get any trade here. Okay. Did not get any trade here, and then after that, which we retraced, and I was looking for buys or sells. Was not looking. The market was not looking clear for me, so I did not take any trade. And my direction was bullish, so I waited for the market to come a little bit lower because we went into this demand zone and we turned bullish. So we came down high, and then I was expecting the market to come a little bit lower. So I did not get any trade during Monday. So I waited. During Tuesday, the market came a little bit. It may not come below the 50% fib. If we take this as a range, so market tried to come below the discount zone, but the market wasn't able to do that. Before going into the discount zone, it turned again to bullish. See, we were selling for a little bit, so we took that small structure. We were selling, and then during a session, we took out this high, and then he came to the upside. This is our direction. During Asia, I did not get any trade. Sorry, I don't trade during Asia session. During London, I did not get any trade. I waited the market to do something. And during New York session, it came into this supply zone. Sorry, demand zone. It came here. The market took this liquidity, which is a London low liquidity. The market also took this liquidity within it, which is inside the demand zone of Asia. If you go to sorry, yeah, market came here and the market turned. So I took a trade here. Same demand zone. 1:2 is my trade. 20 P8. This was the first trade of the week. What are the three main things from my trade setup? That there has to be a fair value gap. This is our fair value gap, which is yet to be filled. Market filled here. And the second thing is liquidity. And then you're already bullish. So I took a buy. When we come to Wednesday, market open, the session itself traded higher. I was still bullish. After market took out this high, I was expecting a little bit of retracement. It's kind of this. I was looking for, this is my low. I was looking for a high to form. So I was not buying or selling. We were clearly trending upward. I was expecting the market to come a little bit to the demand zone to create a higher high and then retrace a little bit so that I can take a long here. You could have traded here also. See, this is a demand zone. We have a fair value gap. We have these liquidities. The market took the liquidity during New York session. This could have been our trade. 1:2. No, TP hit. But I did not take this trade. I was expecting the market would come a little bit low. And we have this here. Something here. Market took out this high, and then see, we broke this low, which this low was responsible for taking out this high. We took this low during night time, and then after a pace session, we were like this. So I understood that the market took out this low. The market is likely on a pullback. So I should be looking for sells. Exactly. So looking for sells. The Asia session traded. The market tried to take the Asia high before going lower, but it went straight away. It was Asia low, and then we retraced a reboot during London session. So we got a good trade here. This is our supply zone. Everything is in 15 minutes right now. Supply zone, do a trade here. We took a trade here. We place our stop loss above the London high. 1:2 height, or we could target the London low also. It's 1:2 around 2.5. We got a good trade here. So after this structure shift here, so we took this low, right? After this, we know that the high is formed. This is our high. This is our high. So I do the fib. This is our high. I will be looking for sells until the market comes into this 50% demand zone. Market gave me a good sell. And then we went higher to the New York session. The market filled this valley up. We have another supply zone which is huge. And we could have taken a trade here, but I did not take a trade because we already tested the 50% zone and started going higher. So I don't want to risk it. I thought if you take that trade now, it's also another 1:2. The market pulled deeper inside its 70.5 zone, which we did not take. This is our second trade of the week. After that, we are done for the we're done for Thursday. It's going to be Friday. The AC session rallied up, so you can see the market was trending lower, and then we took out this recent high, which is responsible for creating a new low. So our direction has also changed because we came into this discount zone, which put the highs that is responsible for taking a low. So I changed my direction again back to bullish. If I was looking to buy somewhere around here, I would be targeting this high because that is the largest way. This is our largest one. We got somewhere here, then we are targeting this for the next leg. During Friday, the market opened. It went higher during the London session. I did not get any trade here. The market went and took this high. We took a London high. We took out Wednesday's high and everything. You could be selling here based on a total sub entry. Total sub entry is nothing but the market goes to take out some liquidity on one side, and after taking liquidity on one side, we go to take the liquidity on the other side. See, the market went there just wick there, and the body close was below the uh, Wednesday's high. You could have bought a trade here after the body close. In which surprise you stop us here, you could have got hit SL. So I don't get I don't get into this trade. Our trade plan demands a supply or a demand zone. Market went lower and took out London high. It took out actually Wednesday's high and yesterday's high. I mean, you got London low. I don't get any trade here. You go to 5 minutes. Also, there is one or a third trade. After we took out this London low, we changed direction. See, maybe in 5 minutes it was a good trade. But our high is very low. We took this high, and there is our far value up at the demand zone. This is our far value up at the demand zone. Right? Yeah, I think I took this trade. This entire thing. This is a demand zone. I mark my demand zone at the bottom of the candle. I'll buy here. Stop loss here. 1:2. Use that after the land on this. So that is around 3 trades per week. The last week, it was a great week. I also took this took this sell after taking this high. I was expecting the market to go and take the London low, but I got hit MISL, after which the market went to go on to the London low. So that's 3 trades of it. That's very simple. We'll have to follow the higher time frame direction, and we'll have to have a clearly defined supply or demand zone, and you should always have a liquidity. Either the liquidity should be resting above the demand zone or the, like this. See here is a perfect setup. We have a liquidity resting above this demand zone, and you also have this, the entire demand zone is created by taking out this liquidity. So this is a high probability setup. Here we don't have just circle liquidity, but still is a resolved liquidity. We go in 5 minutes. These are a trend line liquidity. This happened during London. Okay, that's it. You got 3 trades on last week. It's a great week. Thank you for your support. Please do like and subscribe.